Welcome to Earnings Recap. Today we're covering Meta Platforms, Inc.'s earnings call, January-March 2025.
That's right.
If you enjoy this kind of content, please like the video and subscribe to the channel.
It really helps us out.
In just minutes, you'll get the key numbers on revenue, profit, growth, and what's ahead.
We'll break it all down.
We're focusing on the key financial highlights, company performance, and future strategy.
And those important analyst questions. Always telling.
Okay, let's unpack this today. Meta just gave us a peek under the hood at how things are going. We've got their latest earnings call transcript, and it's packed with information.
It really is.
Our mission today is to cut through the corporate speak and get to the juicy bits, what really matters and what might surprise you.
And what's fascinating here is just the sheer scale we're talking about.
Billions of users.
Exactly. A company with billions of users making these huge strategic bets on the future.
So this deep dive should help us understand not just the numbers.
Right, but the direction Meta is actually heading, the bigger picture.
Okay, let's get right to those key financial highlights then. First quarter of 2025.
Lay it on us.
Total revenue hit $42.3 billion. That's a solid 16% jump year over year.
Yeah, or 19% if you look at constant currency. Strong number.
Very strong. And the family of apps, that's Facebook, Instagram, WhatsApp, brought in nearly all of that, $41.9 billion, also up 16%.
So the core engine is still running really well.
Absolutely. Now, Reality Labs, where their metaverse and AI device efforts live,
That's the longer-term play.
that saw a bit of a dip. It brought in $412 million, which is down 6%.
Okay, so a slight decrease there. Not entirely unexpected, maybe, given the investment phase.
Yeah, seems like it. So strong top-line growth overall, but it's clear they're investing heavily for the future.
And you really see that when you look at the expenses side. Total expenses for Q1 were $24.8 billion.
Which is up 9%. So spending is increasing, but maybe not as fast as revenue.
Right, the margin expanded. If you dig into those expenses, cost of revenue went up 14%. That's higher infrastructure costs, partner payments, things like that.
Makes sense. R&D spending saw a big jump, 22%. That's employee compensation, more infrastructure.
That AI investment showing up.
Definitely. Marketing and sales increased 8%. They mentioned platform integrity work there.
Okay.
And interestingly, general and administrative costs actually decreased by 34%.
34%? Wow. Why?
Mostly lower legal costs compared to the previous period.
Ah, okay. That makes a difference. And they added some staff, too.
Yep. Ended Q1 with just over 76,800 employees, up about 4% from the previous quarter.
Got it. So spending up, R&D way up, but G&A down offsets some of it.
Exactly. And alongside these investments, they're also returning value to shareholders.
Right, the buybacks and dividends.
$13.4 billion in stock buybacks, and they paid out $1.3 billion in dividends.
Keeping shareholders happy while investing.
It's a balancing act. And speaking of investment, capital expenditures, $13.7 billion just in Q1.
$13.7 billion. Wow.
And they've raised their full-year outlook for CapEx significantly. It was $65 billion. Now it's $64 to $72 billion. That's a huge jump in expected spending for the year. Why?
Primarily AI, servers, data centers, network infrastructure, and the actual hardware costs for AI are driving that increase.
So that increased CapEx, it's really the big signal here, a massive bet on AI infrastructure.
Absolutely. It kind of overshadows the fact they slightly lowered their overall expense outlook for the year. The capital investment is the key story.
Right. Okay, so despite these massive investments, how did profitability look?
Still very strong. Operating income for the quarter was $17.6 billion.
That's a 41% operating margin.
Healthy.
Very healthy. And net income came in at $16.6 billion, or 6.43 cents per share.
Good numbers. And their cash position.
Solid. They ended the quarter with $70.2 billion in cash and marketable securities.
Plenty of cushion.
Yep. And $28.8 billion in debt. Plus, they generated $10.3 billion in free cash flow during the quarter.
Okay, strong financials overall. Now, you mentioned the AI bet. Here's where it gets really interesting, I think.
Zuckerberg's 5 points. Exactly. Mark Zuckerberg laid out this really clear vision centered on 5 key interconnected AI opportunities they're chasing.
Yeah, and it's worth noting how he framed them. It wasn't just 5 random things. It was improved advertising.
Right.
More engaging experiences for users. Business messaging.
The next pillar, he called it.
Their own Meta AI assistant.
Which is getting huge usage already.
And finally, AI devices. Like the glasses.
It's not just isolated AI tools, is it? It's about weaving it into everything they do.
Precisely. It's integration. Let's take improved advertising, for example.
Okay.
They're talking about AI becoming like an AI agent for advertisers.
Yeah.
Helping with targeting, even creating the ads themselves.
And they have results.
Some early ones, yeah. Testing a new AI recommendation model for Reels ads apparently increased conversion rates by 5%.
5% is pretty significant in advertising.
It is, and they said 30% more advertisers are already using their AI creative tools.
So adoption is happening.
It seems so. Zuckerberg even speculated that AI could make advertising a bigger slice of the overall global economy.
A bold claim. Okay, what about making the apps more engaging?
That's the second point. Using AI for better content recommendations.
We all experience that, for better or worse.
Right. And they're seeing results. Increased time spent on Facebook up 7%, Instagram up 6%.
And Threads. That was a big number.
Yeah, Threads time spent jumped 35%. They also mentioned it now has over 350 million monthly active users.
Wow, Threads is really finding its footing.
Seems like it, and they're hinting AI could enable totally new kinds of interactive content too, beyond just, scrolling.
Interesting. So better ads, stickier apps. What's next?
Business messaging. This is a big one for them.
WhatsApp and Messenger have billions of users combined.
Exactly. Over 3 billion on WhatsApp, over 1 billion on Messenger. Huge reach.
And the idea is AI agents for businesses.
Yeah, handling customer support, maybe even sales, all through chat, powered by AI.
Like every business having an AI rep on WhatsApp.
That's the vision. They see it as potentially the next major pillar of their business after ads.
Okay, that makes sense. Then there's Meta AI itself.
Their own assistant. Nearly 1 billion monthly active users across their apps already.
1 billion. That's incredible reach already.
It is. The focus now is deepening the experience, making it more personal, better with voice, more entertaining.
And they launched a standalone app too.
Yes, a standalone Meta AI app, likely targeting markets like the US, where WhatsApp isn't quite as dominant.
And the business model there. Ads eventually. Premium features.
Probably a mix. Product recommendations, maybe ads within the AI interaction, potentially premium services down the line. But scale first, monetization later, that seems to be the plan.
The classic Meta playbook.
Pretty much.
Okay, the fifth area was AI devices.
Right. Think the Ray-Ban Meta AI glasses. Sales tripled, apparently.
Tripled. People are actually buying them.
Seems so. They see glasses as the ideal way to blend AI and the metaverse into daily life, an interface for both.
Mixing physical and digital.
Exactly. More launches planned with EssilorLuxottica too, and they're seeing deeper engagement on the Quest VR headsets as well.
And all of this, the ads, the apps, the messaging, the assistants, the devices it all relies on.
Their underlying AI models, like the new Llama 4 family they just released.
And the infrastructure to run it all.
Which brings us back to that massive increase in planned capital expenditure. That $72 billion is what powers this whole AI vision.
Got it. So what's the outlook for next quarter?
For Q2 2025, they're expecting total revenue between $42.5 and $45.5 billion.
So potentially flat to slightly up sequentially from Q1.
Yeah, roughly in that range. And as we mentioned, they slightly lowered the full year expense outlook to $118 billion.
Even while hiking the CapEx outlook. Interesting dynamics.
Very. Shows a focus on efficiency and operations while pouring resources into the long-term AI build-out.
Okay, so that covers the company's strategy. Now, the analysts on the call, they dug into some specifics, right?
Oh, yeah. They always do. They pressed on the practical applications, potential roadblocks, timelines.
What about the Llama AI models? What were the questions there?
A lot of focus on the technical details. Things like low latency for voice AI, making conversations feel natural without delays.
Crucial for a good assistant.
Absolutely. Also, the context window length, how much past conversation the AI can remember to personalize responses.
Sounds like a key for personalization.
Right. And how they develop these models, including using even bigger, more complex models, like one called Behemoth, to sort of distill knowledge into the more efficient Llama models.
Distill, like boiling it down.
Kind of. Taking the core intelligence from a huge model and making a smaller, faster one that still captures the essentials.
Fascinating. What else did analysts ask about AI?
How people are actually using Meta AI right now.
And the answer?
Top uses seem to be gathering information and, interestingly, social interactions.
Using AI for social stuff. How?
The transcript didn't go into deep detail, but maybe drafting messages, brainstorming ideas, that sort of thing. Usage is strongest on WhatsApp, then Facebook through feed integration.
And the standalone app is important for the U.S. market, they said.
Yeah, presumably because WhatsApp isn't the default messenger there, like it is elsewhere.
Okay. Any concerns raised about, outside factors? Economic stuff?
There was a question about e-commerce supply issues. Meta acknowledged seeing some reduced ad spend from Asia-based exporters.
Why?
They were anticipating changes in trade rules, specifically the de minimis exemption for small value imports.
Regulatory uncertainty hitting ad spend.
A little bit, yeah. But Meta said their Q2 outlook already reflects healthy trends they saw in April, so maybe it wasn't a huge impact.
Good to know. And that massive jump in CapEx, obviously analysts asked more about that.
Definitely. Meta explained it's a combination of needing more data center capacity fast.
To get the AI stuff online.
Right. And also, the hardware itself is just expensive, and there's still some supply chain uncertainty pushing up costs.
Are they building it all themselves or using cloud providers?
A mix. They partner with AWS and Azure, for instance, to host Llama models for others to use. But Meta is funding the core training infrastructure themselves. That's the really heavy lifting.
Gotcha. Did they talk about AI helping them internally, like coding?
Yeah, someone asked about AI coding agents. Meta thinks they're still on track for AI to handle tasks like a mid-level engineer by mid to late next year.
Wow, that's soon.
It is. And internally, they're already using AI a lot to help with experiments on their own recommendation systems.
Eating their own dog food, so to speak.
Exactly. There was also a question about whether they have enough AI computing capacity, like, is there a bottleneck?
Is there?
Meta described it as a fluid situation. Basically, supply and demand are constantly shifting, but they're working hard to get more data centers online and make their existing systems more efficient.
Sounds like they're pushing the limits. What about the core ads business? Any updates there?
Continued improvement. They're still seeing strong year-over-year growth in ad conversions.
So the AI improvements are paying off in the ad rankings.
Seems like it. They mentioned a new model called GM showing positive results, and a feature called incremental attribution is apparently helping advertisers see the real impact of their ads better.
Good for proving value, and WhatsApp for business.
Still in the testing phase, really. Trying out AI for sales, customer service, the focus seems to be on giving businesses lots of control and customization.
Makes sense. Any hints about spending beyond 2025?
Nope. They said it's too early to say. Things are just moving too fast in AI development to plan that far ahead for infrastructure.
Fair enough. What do they see as Meta AI's unique edge? Its competitive advantage?
Two main things. Personalization, its ability to learn about you from your interactions and remember context.
Uses all that data they have.
Presumably.
Yeah.
And second, multimodality, being able to handle text, voice, images, video all together.
Okay. What about regulatory hurdles? Europe's DMA came up, I assume?
It did, the Digital Markets Act. Meta said it's still too early to detail specific changes or the financial hit.
But it's potentially significant.
Could be. They noted Europe was 16% of their worldwide ad revenue last year. They're talking with the European Commission.
Something to watch. Any weak spots in advertising verticals?
They mentioned some softness in gaming ads.
Why gaming?
Partly comparing against a really strong period last year, driven by China-based game companies. And also, political ads were down, naturally, after the U.S. elections.
Okay, so specific factors, not a general slowdown.
Right. Most other ad sectors saw healthy growth, they said.
And finally, Reality Labs. Still losing money, right? How do they justify that?
Focus is on efficiency, doing the work smarter.
Yeah.
But they're still really optimistic about AI glasses long term.
What's the goal there? What does success look like?
They're aiming for scale comparable to other successful consumer electronics launches, maybe around 10 million units for a future generation device.
10 million glasses.
That seems to be the kind of scale they think they need before really focusing on making money from it. Scale first.
Again, the playbook.
Ah.
Okay, so wrapping this up, what's the big takeaway?
Well, I mean, it seems pretty clear.
Yeah, Meta is going all in on AI. It's not just a feature, it's becoming the core strategy.
Across everything. Advertising, user experience, business messaging, the AI assistant, the hardware.
It's everywhere.
Yeah.
And their core ad business is still strong, generating the cash to fund these massive, massive investments.
It's a huge transformation they're undertaking, really banking on AI being the future.
So this deep dive, it really raises a question for you, the listener.
Yeah, as AI gets woven more and more into these platforms and devices you use every single day, what changes do you actually expect to see?
Right, how will your digital interactions change?
And what new possibilities might open up that maybe we haven't even thought of yet?
Something to chew on. That's our quick deep dive into Meta's latest earnings.
Hope it gave you a clearer picture.
Hopefully you now have a much clearer picture of where Meta is headed. Thanks for joining us.
Thanks, everyone.